Hey everybody, it's Pete Renzulli. Good morning. Welcome to today's episode of Stock Trading Pro. Today's Stock Market Live, we have a bunch of stuff we want to talk about, very actionable stuff. I do want to start today's video out talking about that I think the market needs a little bit of a timeout. If you're a regular viewer of the channel, you know we talk about the optimal entry. We're a little beyond the optimal entry, but there's so many good things I want to talk about today. I wrote them down to make sure we miss it. We don't miss it. Obviously, we're going to talk about Tesla earnings today. We're going to talk about Netflix earnings today. We're going to talk about the red hot financials and whether or not it's time to get involved or we should be waiting for the optimal entry. We're also going to talk about a stock that is very, very controversial, has absolutely no earnings yet, is growing at 30%. Everybody loves this stock and whether or not it's a buying opportunity because it's rallied recently. And we're also going to talk about a crypto mining stock that had a 32% rally yesterday. And we're going to get into the difference between reading the charts and tape reading, where we're going to add a little bit more of the volume into that and how we could have saw this coming before it happened. And then, of course, we're going to take a look at sector rotation and some of the best stocks to buy now. So you have a bunch of ideas for the rest of the week, maybe even the rest of the month. Actually, we got roughly 11 days left in the month. So we have a bunch of stuff to talk about today. Stick around. I'll be back in just 1 second. Okay, so thank you so much for joining me here today, everybody. I really, really appreciate it. These calls, these meetings, these live sessions, whether you're on video or not, please leave a comment. Let me know what you're looking at. I really like to find out what you're doing. Also, something I want to announce. Obviously, our next boot camp is starting next Monday. If you'd like to learn more about that, you can click below the video. But I was in the shower this morning, and I was thinking about something that would be kind of cool that we can add to our regular scheduled programming. And I think what we're going to end up doing is we're going to have a technical analysis review of the ideas that you have. And I think that would be kind of fun because we'll have a nice live session. You type everything in, we'll go back and forth, and then we'll kind of do like a live back and forth, more like almost like a call-in show where we can discuss why something might be a great idea, why it might be a horrible idea, why you might be chasing it a little bit. So look for an update on that soon. It's going to be coming out definitely within the next week or so, maybe at the beginning of August. So if you haven't done so already, make sure you hit that subscribe button and you'll get updates when those that new show comes out. We have to figure out what day of the week that's going to be the best. So we're actually going to dive right into the market, and we're going to dive right into Tesla because it's a pretty big deal. So we're getting a lot of, wow, the market's rallying right now. It's not going down. Well, let's calm down. It's still a bigger picture bear market. I think what's going on right now is the headlines are so dramatically bearish and ugly and doomsday and recession for the last 90 days that any move to the upside is being perceived as a big move. And anytime we don't move to the downside, it's the market's now, the crash is over. The crash is not over, okay? I would be shocked, literally capital S, shocked, if that was the bottom. I don't want the market to crash. There's just too many other headwinds. It's very clear right now that the Fed next week is going to raise by 0.75 basis points, which again, let's put that together. The last one was 0.75 basis points, which was the biggest raise in 28 years, I believe it was. We're going to do the same thing. So that's pretty significant that what they believe is going on in the market. So the big thing is now whether or not all of these prices have come down. Are they priced in? Does the market need a little bit of a pause? We're first going to take a look at Tesla. Then we're going to dive into Netflix last night and how Netflix is very similar to what Tesla's doing right now. If you're a regular viewer of our Stock Market Live, you know I've been beating the drum on the fact that Tesla really hasn't moved in 3 months. Today, we're going to get a little bit of price action. Today, I'd be shocked if I keep using shocked. We're going to be shocked if we stay inside of that range. Elon Musk does something ahead of Tesla earnings all the time, which is something that Steve Jobs was just an absolute genius at, where he's lowering expectations, talking about all the things that they're not doing and how that's going to get affected just prior to earnings. And then earnings comes out and they beat those lowered expectations and the stock always outperforms. So it's going to be really interesting to see if Elon Musk continues to take stuff from Steve Jobs' legendary playbook at this point. But let's head on over to the charts and let's actually take a look at the way, first, the market. This is really what we're talking about in the market. And obviously, we really hope that you are learning from us to, let me pop myself in there. Hopefully, you're learning that a big part of trading is really mapping out when a stock is obvious or when it's kind of stuck in a box. And you can see the futures here now. This is the first time that we're actually breaking through this level. If you remember yesterday, we actually said this is a critical level for so many stocks. And again, just to give you a heads up on one of them, Costco is probably one of the bigger ones that we're looking at right now. Really good, clean price action. Let me actually get these guys off the chart. And what you can see now is pretty clean price action here. And we haven't even come close to breaking this move to the downside. Now, 3 or 4 days ago, we actually did say that this bullish gap and what it normally does needs to pause. And now it's paused. So we're actually looking for the next move. So we'll see if we break out above that. But here's the one that we're talking about right now. If we hop on over into Tesla and you get a picture of what Tesla's basically done for the last 8 months, it's been bearish to neutral at best. And you can see here, this doesn't lie. Like when it gets stuck in this box, that's technically the right price. There's actually a very famous trading book that was written in the 1950s by somebody who was a dancer, believe it or not. His name was Nicholas Darvis, and his entire strategy, and he made millions and millions of dollars just trading what he called the box method. And essentially, he'd be looking at stocks that went into a box and then went up to another box and then went up to another box. And each of those successive boxes, as they formed, he actually added to that. You know what? Let me actually get that for you. Just give you an idea. I have it over here somewhere. There. So this is the book, in case you don't have the book, How I Made $2 Million in the Stock Market. And essentially all he did was he looked for, it was basically the precursor to technical analysis, and what William O'Neill from Investors Business Daily eventually did with his high bases looking for the next move. It was very similar to that. So if you didn't happen to see that, I don't know how to put it like that. So what's interesting is Tesla's actually doing that in the other direction right now, where it's actually pushing down and holding a box to the downside, and that's not constructive. But what's super interesting about this, and this is really where a lot of both investors and traders get in trouble, is they try and be active when there's nothing to do. So right now, that's the right price in Tesla. Now, we actually talked about it. It's a really wide box. Tesla, we're not making it. This is actually the big thing. You don't need to make a prediction on Tesla stock. You don't need to forecast. We just need to pay attention, because when it gets stuck in a box for this long, you have to let the market tip its hand. You have to let the stock tip its hand. And then the easier money, like Jim Rogers said, is just laying in the corner and we go and pick it up. So the first thing we want to do is we want to acknowledge the fact that it's stuck in. Let's take a look at the numbers. And again, a big thing about earnings season is the easier way to do it is to let the earnings get announced and then hop on board, because there's a lot of smart money. There's a lot of deep pockets, a lot of research they have. They're determining, was the growth from last quarter, assuming there was growth, what was expected or exceeded. Then we listen to what is called the guidance, which is going forward. So it's always two things. So if you happen to be watching Tesla, as we were doing in Netflix last night after the market closed, it can get pretty wild as soon as that announcement comes out. Now, today, we're going to determine whether or not that big subscriber miss in Netflix and whether or not that is something to sink into. And it could just be the same thing as Citigroup and a lot of the financial stocks that just got hammered so much. And Citi was a little bit different example because it was actually trading below book value. But whether or not, just because they're now the current cash flows with the way the stock price has gotten beat up, that's now discounting back that those future cash flows are going to be good from an investment perspective. Tesla's a little bit different. Tesla has so many other things going on right now, and you can see how this is really the price where it continues to just hover. Now, the interesting thing is that if it does finally get above this window, and you can actually see here if we zoom this out for you, it's basically 628 to 767, and we're kind of near the higher part of that range and near the breakout level ahead of that. But again, I'm not predicting. I don't need to forecast. There's really big money hedge funds and all that. They have tons and tons of research. I'm going to let them tell me what to do, and then I'm just going to look for a spot to follow them. So remember, it's pick a side, then pick a spot. Right now, the side in Tesla, it's not clear. Now, I know there's a lot of people that love Tesla very much the same way that a lot of people loved Apple and Steve Jobs, and I get that. If you're a longer-term investor, that's great. You've been looking for it to break out of the box to the upside. But I do want to ask you a question. What happens if it breaks the box to the downside? I know we're kind of hovering near the top of that box, and if we open lower and stay in that box after earnings, for me, there's really nothing to do except for maybe the active part of what I do, which is over that 3 to 5 day window. A longer term move for me would be from this breakout right back up to all-time highs, and these numbers would really need to be big. We all know that the Tesla numbers are being affected by China right now, and this particular situation, the shutdown. I don't want to say the virus that gets caught in the YouTube algorithm. But the big thing here is now, obviously, we're taking a look at, let me actually zoom this in a little bit. is expected to report another decline. Okay, that's actually a really, really big deal. It's still recovering. So here's the deal, and actually looking forward. We know that the numbers that are coming out now are because of what's going on the China shutdowns. Even if Tesla does not exceed expectations and the stock goes down, what we're reporting now is based on those shutdowns. But the guidance is going to be a big thing this afternoon, because if that shutdown starts to work its way out and he stops calling that a furnace where it's just burning money and it actually starts producing cars, that's a pretty big market. So this opportunity, there's two different opportunities right now. If the number becomes a good one, even with the China shutdown, that's pretty bullish news. If the China shutdown becomes the focus of that story for Netflix and we get it pushed down, then we should be paying attention to what happens during the next earnings season and what price action was prior to that. So in other words, if we push down and stay in that box, we're going to be looking for heavy volume. The heavier the volume stuck in that box implies that money is changing from retail who are selling to the smart money who's now sitting in there buying. So there's a lot going on between the short-term active trade that we're going to get over the next 3 to 5 days in Tesla, either way, both buying and short selling. But it's got to get out of this box for me personally. So if the numbers come out, it's still kind of fuzzy. I'm not really going to be looking to do anything, but this is really the big thing I'm going to be paying attention to, is what is the language around this, okay? But if we get clear on this, I just want to make sure everybody has the price that I'm looking for. I'm looking for it to get above 770, and right now it's about 743 and change. And I want to get this across as well. If we have some pretty good volume after hours and that volume follows through on Thursday, that's going to be something special, especially if it's bullish volume taking us through that level. Not hard for the stock to rally $100, $200, and you can actually make your entire quarter. If you've gotten a little bit beat up this quarter, just needs two things. Number one, you need to learn how to manage, read the order flow and read the tape a little bit better, because there's been a ton of opportunity. We'll get over to that into the financials in a second. And energy. I don't know if everybody's been watching energy stocks. The crude oil hit that $95 level, is kind of hanging out there. Now we got bullish gap, and that led to almost the entire market now being strong, which is crazy in a good way, especially if you're a bullish trader right now. And I actually want to pull this up on the screen just to share this with everybody. This is actually how things ended yesterday, where we were green across the board, except for utilities. And now this is the 3-month picture. So a dramatic change in the market in a very short period of time. But the biggest thing I want to get across to everybody, and again, this is actually a big part of this book, I just want to bring that up again, that the first sign of a reversal should be first position size. It's every successful long-term investor, every single one of them scales into positions, especially when you're trading against a obvious bearish market right now. The first sign to the upside, any new positions right now, unless they're already in existing bullish order flow to the upside, you have to start to work those positions. So again, the quality of the idea should dictate the amount of money that you're willing to put into that idea. So let's actually take that over. That's the Tesla breakdown. Let's actually take a look now at Netflix and Netflix from last night. Pretty darn interesting, right? This is really where perspective means everything. Usually with Netflix, when you hear subscriber growth declines, that's usually incredibly bearish for the stock, and bearish mean to the downside. And you can see now the stock is up $13, up 6%. It was up 5% yesterday. But if we map this out, you can see that this looks incredibly similar to the way Netflix is looking Tesla is looking right now. We're still kind of stuck in that box. But what's interesting is this bearish gap, and today we're not getting a bearish gap, and we're kind of hovering now just outside of this box. You can see here we're at 214, which kind of takes us up in this level just outside of this. So how are we looking to trade that stock today? How are we looking to trade Netflix, take advantage of this short-term volume volatility and what is now being perceived as good news, simply because they lost less subscribers than expected? Again, remember, anything you're looking at with earnings is always what was expected and then what happened. So a bigger number was expected. It came in less than that. And in a weird Wall Street way, that was actually perceived as bullish. So we can't fight it. You just read the headline and say that it lost 970,000 subscribers, and you might perceive that as bearish. But again, now because of where the stock was and the cash flow at the current price and the numbers that came out are now being perceived as bullish. So the level that we're looking for here, this is just basic tape reading and basic technical analysis. There's a couple of different ways we can do it. We could be looking at this level here around 245 as the first target, and then up here at 330, which that would be a pretty aggressive move up to 330. I would think that we would need to see another earnings report before we think we can get all the way back up there. But I want to be clear about this, and we're just going to map this out for everybody. My first target is not going to be up there because of how big this move was. My first target is going to be over here, up in this 240, let's say 250, just to keep the number nice and round there. So it's basically looking at about a $36 move higher. So if we're looking at a $36 move, let's actually map the trade out now. Obviously, that's a swing trade, could take place over the next few weeks. We'll see. But the bottom line is this: if we map this trade out in Netflix off of the Netflix earnings catalyst, what we're looking for is we're looking for it to open here. And you know we've done this quite a bit. Again, if you happen to be new to the channel, we're really pretty good at mapping out how to trade these stocks that have these monster gaps. We've done it in Kohl's, the couple of times that Kohl's had the activist investor getting involved. There was Google had a monster move to the upside and just got crushed after that, after last earnings. If you have not seen us do this, do me a favor, please click down and subscribe, because you'll get all these tidbits, so to speak, as we're going along. But what I want to talk about again is this. So let's just say, for argument's sake, and I'm actually going to bring another one of these guys in here, and we're going to map it like right, let's put it right there, right, just for argument's sake, and we're going to change the color on that. Let's change the color to green, just so that we could map this out, right? So that's the color. Actually, you might not be able to see that. Let me make it blue, just so it's easier. Right there, okay? So if we map this out and we open up all the way up here, which is now, again, $13 higher, almost $12.50 higher than where we are. Here's how you map the trade out. So what we're going to actually do now is map this trade out between today's open after the market starts, right? Earnings last night and Netflix are going to open up somewhere today. Now, we're not talking about a day trade. We're talking about a swing trade between now, July 20th, the day after earnings, and the stock getting up to that $250 level, which is actually 1/3 almost of where it was even 8 months ago, right? So you might say it's a bargain. You might say it's value investing. Let's let the market decide. So wherever it ends up opening, and let's just say, for argument's sake, it is at this price. Let's just say right around 215, or maybe somewhere around that price, right? That's our line in the sand. So if you know everything that we do, and this is really the biggest thing that we teach in our boot camp, is you have to first learn order flow, which is the buying pressure obvious, and how do you determine if it's obvious? Then you try to stack that order flow. Once the order flow is stacked, you get back a quality of the order flow. So we're really recognizing, is smart money doing something in that stock, and how long have they been doing it? That's step number one. So if we take that over to Netflix right now and we determine, is order flow obvious in Netflix? And the answer, what would you say? Absolutely not. No way in the world. There's no order flow in Netflix right now. It's been going sideways since May after the last earnings report. So we don't have big order flow. So how does that affect us going into a Netflix deal right now? Again, we're buying part of the company, like Warren Buffett says, pretend you're buying the company, which quite frankly, you actually are, right? You're buying a share of it. Is there order flow? No. So the argument for that's a little bit weaker. So now we're looking at a trade between 214 and 250, looking for the earnings catalyst to kick in. So for me personally right now, I'm actually going to wait to the end of today, knowing that there's going to be roughly a $30 to $36 profit target up to my initial profit target. Remember, initial profit target is just what you believe you can achieve. I sound like Napoleon Hill now. What you believe you can achieve in exchange for your risk. So what I'm looking to do is I'm waiting for the end of the day today in Netflix to put on a new trade. If we close near the high of the day, we have today's open, we have the high of the day, and we have our target. So if we wait till a little bit later in the day and get proof or validation from the smart money, from the deep pockets, from the order flow that yesterday's earnings is holding up, and they're closing that stock strong, when we have near the close today. So again, you could just look at this at 3:30 this afternoon. You don't even have to watch it all day, because we're looking for a longer term trade. Gets up there, you have today's opening price, because that's obviously where we're coming off of the earnings. So that's the first move, right? Then we have the close. So if we close near the highs, Now we have some juice. Now we have something that we can lean into. There's actual buying, and we may determine that Netflix right now is one of the best stocks to buy now. So if we do, we buy. Me personally, again, everything we're talking about is for educational purposes. I'm just walking you through how I do it. I'm buying near the close. Today's low is going to be my today's open is going to be my stop loss. So that distance is going to determine how much I need to let the stock fluctuate. So based on how much I'm willing to risk on the trade from a dollar amount perspective, you have your dollar amount you're willing to risk, your entry, and your stop loss. So the difference between that two tells you the share size. But because there's no order flow here, it's just going sideways, and we're just trading the recent catalyst from last night, which is earnings. I'm not going in with a higher risk. I'm going in with a lower risk with that entry, exit, and profit target, waiting to see, does smart money continue to show up? Now, what does that mean on the daily charts? That simply means that we are looking for, and let me get these guys off the screen. So what that means and what we're looking for is we are looking for this. We want today to open. Actually, we're going to open up like right around in that area there. We want to see, does it go there and stay there? And is that a green candle or is that a red candle? So again, if you're a regular viewer of the channel, you know we talk about energy versus indecision. That's all we look at for on candlestick charts. So energy is a big-bodied candle, which is hopefully in this case green. If it comes in as a Netflix big green candle at the end of the day, great. That's going to tell me now it's time for me to take my first piece of action looking for follow-through. If I get follow-through, fantastic. The next pause, I'll look for adding to that trade, looking for it to hit up towards that 250 level. If it rallies, closes near the low today, so let's say it opens, goes up here, and then closes near the low, that's not what I want it to happen, so I just leave it alone. So everybody that tomorrow, if that second scenario happens, and you see it close near the low, just know that I'm not getting in. Again, this is a big part of what I teach everybody, game planning. You have to map out what happens before the market opens, before the week happens, before you swing trade. Have the guts to say, I know what I'm looking at. Here's what I expect to have happen. If it happens, go get them. If it doesn't happen, step back, have another cup of coffee, and then go look for another idea. So that's how I'm mapping out both Tesla and Netflix, and we're going to determine whether they're the best stocks to buy right now, whether they're top stock picks, which now we're going to take a look at two other stocks that I wanted to talk about, and then we're actually going to get into the financial stocks. So Palantir. Palantir is a big controversial stock. Seeking Alpha now is talking about possibly the buy of the decade. Now, one of the biggest things that I think is super interesting about this article and about Palantir in general, first let's take a look at PLTR stock and get a really good grip on this. And you can see where the stock is, where the stock has been. If you don't know anything about this stock, the CEO of the company is a very polarizing figure. People love him, I guess, because he's different. But the big thing about this, and let's just pull this up on the screen, and this is where we got to really be smart, right? They don't have any earnings yet. I'm not sure like what planet investors work on where the company has not produced any earnings. I'll just keep pulling this up on the screen so you can actually read this and whatnot. They're leaning on the fact that they're saying that the company is growing at 30%, which is their top line revenue. But I want to be clear about this. We'll just cycle this back up to the top, okay? Now, again, everything we talk about here is as educational purposes. I'm telling you the way I look at things. If your neighbor came over to you and said, look, I really want you to invest in my company. I'm not making any money, but I want you to invest in my company. We have a lot of potential. Would you put your money in that company? And again, this is not a knock on PLTR. Oh, everybody's going to write later, I love PLTR, Pete, you're bad. No, this is not a knock on PLTR. This is just talking about the raw numbers. If you are investing in PLTR right now, you are hoping at some point they become profitable. Now, again, let's go back to what we said before. And look, you might decide that's how you want to do things. The stock's $10 now or something like that. Let's actually go back over and see what it is. Not even $10. It's having a hard time getting through 10. You can see how significant this level is right now, 10, 10, 10. So 10 is a really big level. I'm not telling anybody what to do. I'm telling you how I do it. I am not looking to get involved in a company that has no profits yet. On top of the fact they have government contracts, which that is awesome, but they're not spread out. They don't have enough customers, which is why the stock is stuck where it is, because the future cash flows are not validating a higher PE ratio. If that was the case, the stock would be rallying, and it's not right now. It's not getting buying. Now, does that mean they can't turn it around? Of course they can turn it around. If and when that happens, then I will be a little bit more serious about getting into PLTR, because I'm not looking to get involved in the stock just because of the CEO is such a polarizing figure and everybody loves what he does with his software. We should be investing because the company's actually earning money, not because it might earn money. We at least want to see them turn a profit, which is interesting too about Amazon. Amazon actually, last quarter, Amazon was bad. Actually, the margins went down a ton. Keep an eye on Amazon this next quarter because it's very interesting. There's also a reason Amazon hasn't skyrocketed. So that's my take on PLTR. Very, very interesting. And what I'm going to be waiting for. Another one that we're going to take a look at here is Mara and Bitcoin. Let's actually take a look at Bitcoin and again, just drop in here and you can see that we're getting a little bit of a rally, which is sparking a pretty exciting move in the market right now as we're heading to the upside. But Mara, I love trading this stock last year. I haven't traded it. I think over here when this breakout failed is when I stopped. It's catching a little bit of a bid here. And this is really where, and this, I want you to screenshot this. So I'm going to tell you before I put it up on the screen because it's very different. There's a difference between just reading price and tape reading. Tape reading is building that argument, putting all of the reasons into the deal that you're about to invest in or swing trade in, whatever you want to call it. And the more of those reasons, the more conviction you should have. Then it's just a question of how long has that been happening. So there's two things we're going to take a look at. We're going to look at the chart, and then we're going to take a look at a little bit more of tape reading, which is kind of cool because Mara was up 32% yesterday. So that looks impressive, right? Looks great. Big candle here. And then we got this, right? Could we have seen this before it happened? And the answer is yes, absolutely. Look at this right there. The stock exploded on July 8th and then went sideways for 5 days. Now, is that armchair quarterbacking looking backwards? No, it's literally one of the top things that our community does every single day, where it's not just looking at price action. You need to combine price action and volume and determine, is smart money building a position in that stock, or is smart money dumping their position in that stock? And if they're dumping it, we call that either distribution or exhaustion in that case, if it's a big move to the upside. So it's pretty cool to be watching this and putting these pieces together. I want to also give you an idea of something that if you happen to be on the day trading side of things, which I know a lot of people here are swing trading, and that's 100% okay. That's usually where most people are. Most people have a full-time job, and they're looking for another $4,000 to $6,000 on the side, right? That's kind of a nice little semi-retired life. I want to show you something that is a big deal that if you're on the day trading side of things. So this is the New York Stock Exchange tick indicator, and you can see I have a big arrow here on the zero line, and this is up till 1 o'clock in the afternoon yesterday. So zero essentially represents when everything is kind of even. There's no dominant force in the market. Plus 500 or minus 500 are kind of like the minimum viable criteria. So if you want, you could snapshot this because this is kind of important. So you can take a screenshot of this, right? So 0, plus 500, and negative 500. So what I want to get across to you, if you happen to be day trading stocks and on that side of the thing, there are certain times during the market where you have to sit up in your seat and say, wow, this is unusual, amazing, and I need to take advantage of this. So when you have that tick reading and you have the zero line where you're trying to determine, is there a dominant force in the market? And again, I'll just point this out to you here, which you can see down here, hardly anything below zero. That's one of those pockets of opportunity where the market is telling you there is no selling going on, barely any selling during that pocket of opportunity. And now I want to translate that over to what you should have been seeing on the charts yesterday if you happen to have not made pretty good money yesterday because the market was pretty good. And it's, again, one of those opportunities where you needed to see it while it was happening. So if we combine what we just looked at here and combine what was going on in the market yesterday, when I show you this, this is actually going to be pretty astounding when you start to put these pieces together and zoom this out a little bit. Every single hour yesterday was green in the S&P 500. Every single hour yesterday was green in the NASDAQ, and every single hour yesterday was green in the Dow. So I want to say this in a way that really hits you in a big way. Okay, I get it. The stock market's been a little more challenging this year. It's been, quite frankly, if you don't have a structure like we teach in our program, you're probably getting your head beat in a little bit right now because it's going up, it's going down, and you really don't have organization, right? If that happens to be you, I feel for you. I've definitely been there. There's not even a question about that, right? I used to have this quote where I'd say, I was trading so bad I couldn't hit water if I fell out of a boat. That was like my 2002 quote, like going all the way back 20 years ago, right? But as long as you manage the downside, that's the first step towards getting to profitability. That's the first step. The second, which means you stick to your stop losses, you don't move them. The second step is what I just showed you and taught you. When you get to, and it applies to both day trading, swing trading, investing, it doesn't matter, but this is a day trading example, which I think is kind of interesting. All of those small profits and losses, they're part of trading. That's not what's holding you back. What's holding you back from higher levels of stock market success is understanding the situation. When you got that big fish on the line, the market is screaming at you, don't touch that profit, let it go. Those are the situations that will separate you from everybody who says trading doesn't work to you retiring comfortably because you know trading does work. It's you that needs to work the trading system. And that's really a big difference. What happens in the market is not important. Being structured to make money, understanding a great situation from a crappy situation, staying away from the crappy situation, managing risk on even good trades that don't follow through, and learning how to hang on to those winners. That's what's going to separate you from everybody else who says it doesn't work. It absolutely works. You just need to have rules and follow them. You need to have an edge. And obviously our edge, order flow and tape reading. So if you want to learn a little bit more about our boot camp, which starts next week, you can click the link below. If this is the first time that you've been with us here on the channel, or if it's not, please do me a favor. If we provided some value for you today, I'd really appreciate it if you make sure you hit that subscribe button, hit the like button, which will tell me if you liked this type of comment. So I'll keep doing more of this stuff. And if you have any future questions that you might think of after this video, leave those comments below the video. I'll be more than happy to get back to you as well on that one. So have an awesome day, everybody. I really appreciate you joining me here today, and go have an awesome day in the market today too. Take care now. Thank you so much.